review market and sector trends. We'll examine some economic drivers, specifically interest rates in the dollar, and then we are going to go over and try to look at some trends in the overall market and individual sectors, drill down, and perhaps do an example trade or two. All right, so with that, let's start by going over to the platform. And I wanted to start today by looking at the 10-year yield. Notice how we went up a little bit from the open today. I'm going to go to a 5-minute chart just so I can explain what's happening, okay? All right, so notice here at 10 o'clock Eastern, how we had a big spike up on the yield. That's due to the $37 billion reopening of the 10-year Treasury today. The auction was weaker than expected, which means the yields were a little bit higher than the when issued yield. That is on the heels yesterday, though, of a very strong 3-year auction. So anyway, I just wanted to show you that the auctions can have a little bit of an effect right when they come out. So we can see a little bit of spike there. Now let's go and take a look. If the interest rates are up, sometimes that will move the dollar a little bit. Let's go take a look at the dollar index. I'm going to change this back to a year chart. We're going to go look at the dollar. All right, so the dollar really hadn't done too much. Let's look at the 5-minute chart and see if it did anything when the Treasury auction came out. Yeah, it had you can see it had a little bit of a spike there when interest rates shot up, but it's kind of given it back. So going back to the 1-year chart, I think we can say the dollar, we had this flag that I talked about a week or so ago and thought that it might get down and test support that some technical traders are seeing there at about 100.99. It did do that. It did not make the whole measured move target from the bear flag, though. But so right now it's about where it was. So it looks like it's maybe consolidating a little bit in here. Also, could this be considered a little bit of an inverse head and shoulders, in the very short term? Perhaps. So we'll keep an eye on that. All right. So what I'm going to do now is we're going to start looking at the overall market. So we're going to start with the S&P 500. Remember, we look not only at the chart of the S&P, we also look at market internals, we look at seasonals to help us in our analysis. So we're going to use all of those tools that I've been trying to give you over the last few weeks, hopefully to sharpen our analysis a little bit. All right. So what I'm going to do is put this back down to here, and we're going to start off with looking at the S&P 500. All right. So we have a little bit of an uptrend going on here after the breakout of the high from September and August. We are very close to tickling that all-time high of 47.93.30. We might be losing a little bit of momentum up here as I'll try to show you. So this is what we see, but now let's look under the surface, okay? So the first thing we're going to do is check our VIX signal. So I'm going to load up our VIX signal. For those not familiar, I'll explain it when we get there. All right. So again, we look at this pretty much every week now that people understand it. For those that are new, what we have here at the top, this is the VIX. We probably all know what that is, just the volatility gauge. And what we do is put Bollinger Bands on them. They're not the regular Bollinger Bands. They have different settings. It's a 50-period moving average and 1 standard deviation. And what we do is try to look for the slope of the upper band. This is a method that some traders have got from Tom McClellan. All right. Notice that when the slope starts going down, the market often goes up. I'm just giving you the last few signals here. So where are we now on this signal? Well, where we are now is we have a down sloping upper Bollinger Band on the VIX. It started here, so this is that blue line you saw on the other chart, and so this is a longer term, more of an intermediate term signal. So traders looking at this might consider that this is still leaning towards the bullish side. So that's the first thing we're going to look at. Now let's look at the market internals. So we're going to put this chart back down. And the next thing we are going to do, all right, is we are going to look at the McClellan oscillators. All right, so I'm going to reload this workspace to my market and sector workspace. And now we're going to look at this. So a couple of things we notice here. All right. For those not familiar, now we're looking at the New York Stock Exchange Composite, a very broad measure of equities. And there's also a lot of closed-end funds on the New York. And we're looking at the momentum of the advance to decline line. And we measure that a couple different ways. We can just look at the advance to decline line. You can see it's losing a little momentum, right? And we have the McClellan oscillator, which is the momentum measurement of the advance to decline line. It had dropped below zero. And we haven't made a lot of progress since this. I pointed this out on my Twitter the first time it dropped, and we really haven't made any progress on the market since then. So some traders looking at this signal, you know, it's not terribly, it's a little bit leaning to the consolidation side. I think some traders might say that. So just put that in the back of your mind. Maybe we're going into a little bit of a consolidation, perhaps. We'll take a look at some other exchanges as well. Now, the longer term signal, this is a shorter term signal on the market. The longer term signal on the market based on this is the McClellan summation index. Okay, so let's go ahead and take a look at that. So I'm going to put a study set here, which I have not only the oscillator, but I have few other things. All right. So here we go. So again, here is the McClellan oscillator. Here is the summation index. For those not familiar, the summation index is just a running total of the oscillator values. We see a little bit of consolidation here, right? These are not going up anymore. They're red, which means they are lower than the previous ones. So this just suggests maybe a little bit of consolidation, perhaps, as we approach that high that we see. Down below, I have the sector rotation model. That is a indicator that you can load up. It's pre-built. It's not trying to tell you sector rotation. What it does is it looks at the orientation of all the different sectors and tries to make, based on historical data, is the sector orientation more towards what happens when the market is generally going higher, or is it more when the market is going lower? By that, I mean, if the market was a little bit defensive, you'd probably see the ratio of more defensive sectors like utilities, like staples, maybe doing better than some of the more aggressive sectors like industrials, something like that. So the sector rotation model just takes into account those ratios, and it gives a value. Right now, it's still green, which means longer term, it is not suggesting a whole lot of problems with the market. So those are giving us, so we got a little consolidation perhaps on the McClellans. This is okay. Let's look at the seasonals next, though. All right. But before we do that, I've been asked, you know, we're looking at the New York Stock Exchange Composite, but I trade the NASDAQ. So let's just do something here to show the NASDAQ with some of these as well. All right. So what we're going to do is I'm going to go back to my study set here. I'm just going to do the McClellan oscillator for right now. But remember, the McClellan oscillator is based on the New York Stock Exchange, but you can change that. Okay. So what we're going to do is change the index to the NASDAQ composite. And we're going to see if this looks at all similar to the NYA. Now, this is still giving us the McClellan oscillator based on the New York Stock Exchange composite. That's not what we want. So we have to modify this. Okay. So we're going to just right click on there. I can get it there. There we go. We're going to edit it. And what we do is we change the exchange it's doing the calculation on. Okay. So we're going to change that to NASDAQ. All right. And then I'll say OK here. And we see it looks about the same. It's a little bit lower than the other one, though. So, maybe a little bit more consolidation coming in here in the very short term. Again, it's not surprising given that we're kind of approaching highs. Maybe the momentum will slow down a little bit there. All right. So we checked that out. Now let's go check out the seasonals here. All right, so right now we're looking at the S&P 500. This is the seasonal. What I've done is I've gone and pulled data, okay? I want to pull data from the last 20 years. So I want the last 20 years, how it is done on every day of the year. So I'm going to change that to 20 days. You can't see this right now very well, can you? So what we have to do is make this line bigger so it looks like it was before. How do we do that? We just click on this little price axis setting here, change it to manual, and we just pull down on here. That pulls up, and now we see that today we are at 110. Historically, over the last 20 years, all right, we're going into a period where we, again, we're seeing it in the McClellan index, right? And we're seeing it a little bit here that seasonally the next week or two hasn't been the strongest. Now, again, this is just an average. Things can obviously change, but, putting 2 and 2 together, maybe we might be looking for a little consolidations. Let's see if the NASDAQ looks any different seasonally. Shall we do that? How will we do that? We're going to change this to the NASDAQ composite. All right, we got to do the same thing here because we can't get very much information on a little line like that. Let's just make sure we're pulling 20 years worth of data in. We are, okay? And then we're just going to go up once again to here, change it to manual so we can pull this line up. All right, so again, here we are on the 10th. So the NASDAQ looks a little stronger, doesn't it? It's not going on quite as much as the the S&P 500. But again, also, it's not looking like it's going to, at least seasonally, things might not take off right away either. All right. Okay, we have some questions. Let me get that before we go any further. We have a question from Ken. Any benefit to merging the McClellan oscillator with the summation? I think people look at them in combination. I don't think they put them together, but as I said, I had it in 2 different study panels. So the longer term trend based on the summation index is weakening just a little bit, but it is certainly not negative. Those lines, even though they're red, all right, are still above zero. What is below zero is the McClellan oscillator, which means we're having a little bit of a pullback in the breath as maybe we're trying to figure out if we're going to break to new highs or not. That could be one way that some traders might interpret that data. All right, let's go take a look and just see what the NDX is doing, and then we'll take a look at the Russell also. So let's put up the NDX. This is the NASDAQ 100. Yeah, so it's coming up here. Now, the question I think some traders have, is it going to roll over before it tests the high? That's how you start making a kind of a head and shoulders. We don't know that yet. We won't know it for a while. It's just something to keep, and hopefully it will go up there and test it and hopefully break through. But anyway, that's how it works. So we have a question on the seasonal. I can't really share the seasonal, but I can show you how to do it. Okay. We try to answer all questions we can. So how do you do a seasonal chart? All right. Let me put this back up here. Let's go to style. All right. I'm going to turn it back to regular. All right. Standard. All right. So this is standard. Okay. And what we want to do is turn it into a seasonal chart. So let me show you how to do that. All right. So the first thing you do is you go to style and you go standard. No, we want seasonality. All right. So that's the way we want the chart. So now you will get this line. To make it meaningful, you got to pull in as much data as you can. Okay. And again, I've got 20 years here, 20 years every day. Oops, sorry about that. All right. Now to get this line up, again, the trick is you click here and you turn it to manual, and then you can just click above the line and pull down, and then it will pull it up. So you can do this on anything. You can do it on sectors. You can do it on commodities or futures. So it just a way to give you an idea where nothing works all the time, of course, but simply it is a little bit of a roadmap of historical data anyway. All right, let's take a look at the small caps. Now, this is a little disappointing. We had broken out through the July and August highs, and we tested the breakout level. This is why, now you might have been a little bit encouraged in here. Let's zoom in a little bit here. You know, it looks like we had a doji when we were testing this. A doji is where the close and the open are around the same area. Okay. And basically, it looked like we had a doji, so a little indecision right at the test of the breakout level. All right. But we did have a little indecision, but I guess they gave up the ghost there. So we could have perhaps gone up, but we didn't. So once again, I think some traders are looking at the Russell level of this 2014 level. They would like to get back above there. Now let's go and just see if the seasonals, all right, have any change for the little guys. Let's go back and do that. All right, so we'll change the index. Oops. I thought I could go through a whole webcast without making a typo. All right, so again, we are going to, it's a seasonal chart. We're going to turn it into manual up here. And we are going to pull this down. And it looks like it peaks a little bit later, a couple days later, before we have a little bit of a downdraft in the mid part of the month here. So just keep that in the back of your mind. Again, we would like to take out that resistance level that some traders are seeing at that 2014. All right, so that's our overall market review. Let us take a look at what sector action is doing. Now, we can do that in a couple of different ways. I've got lots of little tools here for you. So the first one is, I borrowed this from one of the other coaches. So we all learn from each other. I'm going to show you this chart view of all the sectors over the last month. So we do that by clicking here on the grid, and now we have this. I have this. I can share this grid with you if you want. All right, so what it does now is it gives us all the sectors plus the S&P 500 on one screen. All right, again, I wish I had thought of this, but this is from Connie Hill. And what do we see just looking at this, if we're just looking for kind of relative strength, even without sorting by relative strength, okay? So we see materials is kind of going down the last few weeks. Consumer staples is kind of not bad, going up a little bit. We've got energy, unfortunately, is a little weak, right? We've got communication services. Yeah, they're really moving, perhaps making a high. All right. And the healthcare is also doing the same thing. Now, what you can do, this is just the last month. If you want to look at longer term time frame, I have another little tool here. All right. So let's get out of this, go back to my market and sector layout. And we'll do it for the last year. All right. So on this chart, just to get you oriented, the candles are the market. And then we have this is information technology. This is the wrong color. This is communication services. I can't seem to make it stick. It's this one here. So I got to make it orange. The way you do that, just make it orange here. All right, so this is communication services, and this one here is discretionary. Okay, so those have been the three that have done the best. However, healthcare is beginning to move. We can see that a little bit, all right, with another tool. So let me open up the side panel here. All right, and here we have relative strength versus the S&P 500 in different time frames. Some traders use this tool to look for rotation. All right, let's just show you how to do that before we move on. So 63 days, that is the last quarter. 42 days is 2 months. 21 days is about a month. Last 2 weeks, last week. All right, so let's just start 2 months ago. So healthcare is strong, okay? And communication services has been strong. Real estate has been fairly strong as well, as interest rates have been dropping. That's the last 2 months. Let's go to the last month. Same, look at that. See how healthcare is moving up? It's in the last 2 time frames, it's still stayed strong, along with the leaders for the year, information technology and communication services. Right now, we're having a little bit of a pullback in healthcare today, as it is pulled back just a little bit today. But we do have a little bit of strength. Maybe we could look into healthcare or something like that. But that's one way to do it. Now, we can look at some of these charts by themselves if we want. So let's just look at healthcare and the 3 strong ones, their actual charts, and then we're going to drill down and look for stronger indices. I'm going to industries. I'm going to show you how to do that too. Okay, so let's put this back. All right, and what we're going to do now is I'm going to just pull this in a little bit, and let's just look. I have this linked to this chart, so we'll make this one big again, and then let's look at. Oops. Consumer discretionary. So this is what we would like to see on the Russell. All right. So we've gone up, we've pulled back. It looks like we failed, but we've kind of come back. Let's zoom in here a little bit. And right now we seem to be 3 days back above this kind of resistance level that we had from the 2 highs back here, the Russian, the Russell, right? Now let's take a look at healthcare. So this is what I mean. Healthcare has been on a tear. It broke out. It hasn't really made the measured move yet. It's getting there, but pretty good strength. A little bit of a pullback today from yesterday. That's why I think it's down just a little bit in the relative strength today. And then let's take a look at information technology. All right, so information technology, we had a pullback to a moving average. It bounced up there, and we are threatening the highs up there. Now, that's the first thing I wanted to show you. We're going to be looking for the top-down approach type trade. So the market we see could be consolidating perhaps based on all those different indicators we looked at, but it is not selling off really hard, right? So maybe if we look for a strong sector, all right, and then we shall get maybe a strong industry group. But how are you going to do that? Well, we could drill down within healthcare, but I'm going to show you another way. All right. So what we're going to do is I'm going to close this. I'm going to go to my scan tool here. All right. And I just have a standard screen that I use for breakouts, which, and what we're going to do is just see if any industry groups already are going. For all these scripts and everything, I will put them in the notes in the archive session, or I'll put them on my Twitter. If we have time at the end, I can put them in the chat too. So I know that I'll give them to you for sure. But what we're going to do now is I'm going to go here to this scan, and I'm going to not do the NASDAQ 100. What I'm going to do is I'm going to go to sectors and industries in the S&P 500, and I'm going to look for something that is going to break out. Let me just go over the parameters of this quick breakout screen. So I got something that's going up. I got the 15-day moving average greater than the 50. Again, 2 moving averages. The faster one is greater than the slower one. All right. I've got the 10-day RSI greater than the 30-day RSI. So that means the short-term momentum, all right, is stronger than the momentum over the last 5 weeks. And then I've got the volume is greater over the last 5 days than it's been over the last month. All right. And then I just have the high taking out the 20-day high. So let's just see what we get. All right, so here we get the strong industry groups. All right, and what do we notice there? We notice healthcare, equipment, and supplies. Healthcare, equipment, and supply sub-industries. So that's kind of validating what we saw on the other relative strength that we looked at, right? Communication services, and there's one Staples in there. This one, but looks like healthcare, equipment, and services. So if we looked for a stock in a strong sector, we know healthcare has been strong. We saw that in a couple of different ways. We know that these sectors might be breaking out. Let's take a look at a chart of the healthcare equipment sector. So that's, I'm going to get this list up by doing, I'm going to put save as watch list. I'm going to put strong industry. All right, so now we'll go over here to the gadget on the right here. We'll change this to strong industry. Where did it go? There it is. Oop. All right, and then let's open up so we can know which is which. Let's go to the chart here. All right, I'm going to link this to this chart. What happened there? Hang on. Oh, why did it do that? We had them there in a second, right? There you go. All right. So it's this was 35, right? So we're going to link this chart to number 2 there, and then we're going to click on it. Well, look at that. Yes. So we also have a looks like a breakout here. Maybe we can put in a line here. So some traders might see a little bit of resistance here. This resistance by right this high this congestion zone in here. Some traders might use that. We pull back to that area. So we have taken that out. All right. So this is maybe what we see with all these other ones. But now we need to look for a list of healthcare supplier stock, right? That maybe you're doing something like this as well. So what we're going to do then is go back to our scan tool, and I'm going to do a very easy scan. Number one, I'm going to change the list, and we are going to look for, in that group that we saw, we're going to do healthcare, and then we're going to do healthcare equipment and supplies, both of them. Whoops. Hang on. So we want industry. I got to go slower. Healthcare equipment and supplies. We want there. And then I'm going to pull up a different little scan, just something really easy. Stocks making a 20-day high within that group. All right. So here's a potential list that we could look at. Again, if we wanted to put it in a watch list, we can do healthcare equipment strong or something like that. Load that up over here. I got to go to that. There we go. Healthcare equipment strong. All right, we'll put up our chart, and I want to look at a couple of these with you. Let's take a look at Stryker. Very interesting, perhaps. This looks like a pretty good breakout, at least for some traders. We've had a lot of resistance up here, 1, 2, 3, basically 4 touches, and now we have taken this out. Let's zoom in here a little bit. All right. Well, perhaps we are making a move here. So this is one particular one. We'll put in the back of our mind here. And then let's go and take a look at another one from that list too. This one's interesting for some traders in a different way, because this is the first time that this stock has traded above the 200-day moving average since, which is this green line here, since last fall or summer. Okay. So there you go. So 2 potential trades that we might be able to look at. Before we do that, though, let's just look and see how our other trades from our market and sector analysis for the last couple of weeks have been doing. Okay. And then we'll come back and we shall maybe look at one of these 2. So the way we're going to do that is we're going to go to the monitor. Let me close this. I'm going to go to the monitor, and we have 2. So we went into Johnson & Johnson because of healthcare, and then we went into Invesco Limited because we saw some strength in financials the last time as well. So let's just take a look at IVZ first. We're doing okay on this one. All right, so we bought it. Looks at 1435. It's up at 17 1/8. Right now we have a stop. I put it under this low before the breakout, so at the top of the gap. The question is, do we want to raise it at all at this stage? I mean, we could raise it a little, maybe under these 2 lows, but this is also a pretty good level of gap, so maybe we'll just keep that the way it is. All right. Next, let's take a look at the other one we had, which was J&J. Let's take a look at J&J. Then we had another one, the stop went off. We'll take a look at that trade too. All right. Yeah, so this one we bought at 160, 128. We have a stop. Now we've taken out, haven't we? We've taken out this band of resistance. We've also taken out the 100-day moving average and the 200-day moving average. Some traders might consider raising the stop on this one because we could have it under a resistance level and a major moving average if we put it right under the resistance level. Let's do that. Let's lock that in a little bit. Move that up. All right, so here's what we're doing on this one. We're replacing our stop and we are moving it up. And remember, with stop orders, there's no guarantee what we're going to get. They turn into market orders, but let's do that. And now we've raised the stop on this one. And then the last trade we had was Lululemon. If you've been following along with me, let's see. Now that we got stopped out on Lululemon, let's see how we did. So the way we do that is we go to the monitor here, and then we're going to go to account statement. And then what I'm going to do is go back to when we started this course, which was November 6th. All right. And then we're going to look for Lululemon. Oops. All right. So this is what we did. We bought it at 430.13 and we got stopped out at 482.16. So wasn't too bad. 52 points on that one. Okay. All right. Before we go and do the new trades, I'm going to look at some of the questions. All right, because I see there's quite a in there. Let me just take a quick look. Let's see. All right. Let's see. The watch lists. Most of them are pre-built, right? So, I mean, if you go in here, there a lot of these are public lists, like the public lists of all those industries and sectors are right here, sectors and industries. So you can do that. If you're talking about these columns, yeah, I'll put those in the notes in the, I can't put all of those scripts in the chat, but I'll put them in the notes on the archive. Let's see what else we have. All right, yeah, there is some issues, and I think Cam is trying to say we've been using the Schwab version of Thinkorswim. Sometimes these scripts, if you still have the TD Ameritrade version, they don't work immediately. So say they've been working after 2 days or so. So that's the best I can do for you there. Also, remember, if you get a link, I've also seen this, that people click on the link. It doesn't work that way. When you get a link, you've got to go up here to open shared item, and that's where you put in the URL. You don't just click on the link, okay? All right. All right, let me just check any other questions. Okay. All right, so let's go back and take a look at X-ray versus Striker there. And we've got a lot of comments on that, and we'll try to come to some sort of conclusion, all right? All right, so let's here, look at Striker first. All right, let's back it up just a little bit. Make sure that there is no, let's go to the weekly for a second, just see if there's anything above there for us. No, all right. So this looks like it's at not only a 20-day high, but a new high. Okay. Potential target on this one. Did somebody? I think somebody wanted maybe a way to get a target here. One way that some traders might do a target is, this is a very long consolidation. So we could just take the height of that range and project it up. One way we could do that is go to our drawing tool here and get a, I'll do that. All right, we can do this, and then we can duplicate this and then draw it up. So the potential upside on the longer term basis, okay, you can see where that is. That's about 370 or something like that. Let's go to the daily and see, just fine tune that a little bit. Oh, it would be the same. Yep, it'd be the same. So right up here about 360, it just makes it look like a better range. Okay, so that's that one. Now let's take a look at the X-ray one. So we do have a little bit of what some traders might see as resistance up here. So, maybe we have a little bit more upside on that. Now, somebody wants to see a fib extension on Striker. Yeah, let's take a look at that. Good point. So we'll go down here to drawings. Where is it here? Here. I didn't want to do that. All right. So a potential first target based on this methodology would be 339. That would be the 161% extension. Okay. So that'd be like 339 there. Now, you could put in a target, but on the other hand, all right, this is a breakout of a huge range. This is how far it could go, but it could just, maybe we would basically just do it with a stop, right? And not try to just see how high it can go. So we have like 1 minute left before we got to start closing up. So put in your votes, Striker or X-ray. And I'll wait. It takes a little bit of time for that to come in here. But from what I've been seeing, it looks like Striker. Okay. All right. So what we could do then is buy this with a stop, perhaps. So we can right click in here. We can go buy custom just with a stop. Yeah. Striker is winning here. All right. So we'll just do it at the market. We got to figure out how much. So again, we put in about $5,000 a trade. So this is trading at 307. So 15, 16 shares, something like that. Let me just pull this over so we can see it a little bit better. Oops. No, not 16,100. That would be even bigger than my account. 16 shares. Yeah, it's still doing that. Oh, that's why. Great ideas, and I can't do the trade. Okay. See if that'll give me 16. There must be some zeros in there, huh? Try it this way. Help me out here, guys. Why are those zeros in there? Let's go back and do it by shares. See if I can get it now. There we go. All right. We're going to buy 16, sell 16. The stop, let's take a look at that chart for a second. So the breakout level is about 307.71. You know, we could look at an ATR on this, or we could just do what 1% would be $3, 2% would be $6. So maybe put it at 301. All right, we'll do that good till canceled. All right, we'll do this at the market. Furman said. All right, so we're going to buy 16 shares of Stryker at the market, and we are going to place a stop a little bit under the breakout level by a couple percent. Remember, we won't necessarily get 301 stops turn into market orders, so they can be different. Also, we don't know exactly what we're going to buy it at because it's a market order. So let's go ahead and just place this, and we'll put it in our market and sector analysis portion. And there we go. All righty. So our time is up, but thank you very much. I will put a lot of the scripts both on my Twitter account and also in the notes in the archive because there's just too many to do it, but I'll put them all in there for you. I want to